Thanks very much, Eric. Thanks to all of you for coming out today, the Saturday before PDAC. So again, my name is Matt Turner, President and CEO of Rockhaven Resources, and today I'll be walking everyone through our flagship Claza Gold Silver project located in Canada's Yukon. That's our forward-looking statement slide. So I'm going to have a little bit of fun right off the bat here and take everyone back 30 years ago, back to 1988. It was a great year, but there was a few missteps or misses, I guess you could say. One was this was the year when Milli Vanilli was founded, the duo, German duo that put out a couple big hits, won a bunch of Grammys, and then it all came out that they were lip syncing and they had to give their Grammys back and it all fell apart. Also, in 1988 was the ski ballet debuted as a demonstration sport at the Calgary Winter Games. And again, I think for the greater good of humanity, this sport kind of fizzled out not long after. In 88 as well, you could buy a cellular phone at Radio Shack for $1,500. Again, the adverse health effects, this thing kind of went sideways for about a decade until they figured out the technology. That brings me to the Yukon. There was another misstep or big mess in the Yukon, and that was on our project. So BYG Natural Resources Inc. had the Claza project, and they did a pretty decent exploration program in 1988. But they took a look at the data and said, oh, it's probably not big enough. We're going to focus on our Mount Nansen mine, which is only about 8 kilometers away. Fast forward through the years, they got the mine going again, and due to low gold prices, the mine went under, the company went bankrupt. The receiver that held the claims, including the Claza claims, accidentally allowed the Claza claims to lapse. Our sister company took it over or staked the ground, and then in 2010, sold it to us. And that's us basically mobbing out into the project in 2010. You can call us the Three Amigos or Three Stooges, whatever you want to call us. But we did know a few things. One, that we were in a mining camp. So basically we were doing Brownsfield exploration. We knew what we were supposed to be looking for, obviously. There was about 12 active placer mining operations right immediately around our property. And we knew the rocks were right, and far better host rocks than what hosted the mineralization at the nearby mine. So fast forward to today, 2018, this is where we stand. 94,000 meters of diamond drilling completed in 434 holes. We expect to be collaring our 500th hole this summer. You can just see it at the bottom there, 24,000 meters of excavator trenching and over 100 trenches. All of our zones come to surface, so excavator trenching has been very useful in discovering the zones at Claza. There's an aerial shot of the Claza property. I don't have the zones overlain on there, but they run for 2.5 kilometers, the two main zones. And you can see the trenches and some of the little marks there. Those are where our drill pads are. So again, this is all led into our resource, which actually, this is kind of an old resource. It came out 2 years ago, but it's impressive. Just under 10 million tons of 4.5 gram material, gold, 89 grams silver average, and about 1.7% combined lead zinc. That equates to about 1.36 million ounces of gold, 27 million ounces of silver, and about 350 million pounds of lead and zinc combined. So accounting for metallurgical recoveries, we're sitting at about 1.8 million ounces of gold equivalent at about a 6 gram average. So it's impressive, but again, in red there, you can see it doesn't include the last 2 years of drilling, which is 24,000 meters. So we've added a lot to this, like Eric said. And that should be coming out in the next couple months or so. We did economics on the old resource. It was good, but again, it was done at lower gold prices, much lower base metal prices as well. And so we expect the next go around, especially what this PA told us, where it told us to focus, and that's basically finding more near surface ounces, which has been basically the main target for the last 24,000 meters. Nonetheless, you can see it's going to be an open pit and underground mining operation in the lower right. So again, location's key in northern Canada. Claza is one of the best, if not the best, located advanced project in all of Yukon. We sit about 3.25 hour drive away from the capital city of Whitehorse, and we're in the Dawson Gold Belt, which hosts the Casino deposit, Goldcorp's Coffee deposit, and the White Gold deposit. But compared to them, we're fortunate enough to have a road. So again, you can drive in the big trucks. Fuel trucks come right into camp to fill up. All our drills are road accessible. So it really keeps the cost down. What we don't have to deal with is any sort of aviation or fixed wing, or helicopters or fixed wing. And again, that keeps our cost down to about $200 all in a meter. And for Northern Canada, that's one of the best out there. We own the project 100%. Most of the claims are unencumbered by any net smelter return royalties, including the claims that cover the resource areas, which is huge. It's a bit of an ace up our sleeve going forward for future project financing. Coeur Mining came in, so gave a really nice endorsement in the project. They came in early 2017. They put about $3 million into us, and that funded the bulk of last year's work. We look forward to moving the project forward with their help. The project is real, the deposit is real, and we show that every press release. We've got cross sections, long sections, plan maps, core photos. We like to demonstrate really what we have here. And we're a real technical group, and so it definitely comes out in the way that we show the project. The veins themselves are narrow, but they're extremely high grade. They're quite a bit heavier than the surrounding host rock, and that's going to play into some of our metallurgical work that we're doing right now. The veins themselves exhibit exceptional continuity, and all the veins begin at surface, which is huge because the low-hanging economic fruit is still on the vine here on this project. I don't have time to go through these assays, but you can see that the second column shows the width, which is about 90 to 95% true width. The third column is the gold, and the fourth column is the silver. These are just some of the highlights from one of our zones, the Western BRX zone. These deposits are getting harder and harder to find, and especially being in a developed area, in a good political jurisdiction, it's again, these things are really hard to find, and we're happy to have it. So going forward, how are we going to take this project to the 2.5, 3+ million ounces? Well, we've got numerous targets, and these are bona fide targets on this property. We did a fence of drill holes. You can see one of the holes there, 403. That was to the north of the current resource, and we hit 6 new mineralized structures. We expect to expand those this coming summer. Also to the south, we've got the Rusk target, which is still just a soil geochemical anomaly, but we acquired that ground 2 years ago, and there was basically nothing known. There was 2 really short excavator trenches on the very southern edge of that anomaly, and again, we don't know what's there, but the soil geochem is pretty spectacular. And then the Val property as well, back to the southeast, that's only about 2.5 kilometers away from the mine. Really nice soil geochem and nice geophysics. Hasn't seen a drill hole ever. So this slide, this was a chart. I showed this at the last Metals Investors Forum, but it was a chart that was put out by RBC back in the end of August 2017. And it basically looks at the valuation of gold juniors. So on the y-axis, we're looking at market cap over total ounces. So basically your valuation per ounce in the ground. And then on the x-axis, we've got the grade. So you can take a look at this, see if you see any of the stocks that you follow, see where they lie. Again, I'll make it a little bit easier. So really cheap on the y-axis at the lower end, gets really expensive as you get up, and then low grade, high grade. But you can see, one thing I'll point out is when you're getting north of 3 grams on the x-axis, there's not much that comes up until you get to Sabina, Lundin, Pure Gold, Continental, Dalradian. Those are all valued between about $45 up to almost $80 US per ounce in the ground. And again, Rockhaven wasn't included in this report, but if we had, that's where we plot. So again, everyone's here to look for investment ideas, look to see how they can make money. This is a definite just proof of the undervalued nature of Claza and of Rockhaven, and we hope to even be getting the bubble bigger, right, as when we put out the new resource. So, again, we're undervalued. We're not going to cry ourselves to sleep at night. What we're going to do is go out and shepherd this project across the finish line. What we're going to be doing this year, updated metallurgy, that should be out soon. Again, a resource update shortly as well. And then that should feed into I think a fairly large financing to fund a large exploration program for 2018. And I guess one of the big things too, I still have a lot of people coming up to me saying, Matt, I love what you're doing. Just heard about the story, haven't heard about it before. So again, increasing the market awareness and making sure people know Claza and it gets the credit it deserves. Again, there's our people, our structure. Look forward to meeting you over the rest of the day and into the PDAC. Thank you very much.